Ladies and gentlemen, open banking pioneers, hello and a very warm welcome from Salesforce Towers. Today I'm here with Ryan from Salesforce, literally up in the clouds. And behind me you can see the gherkin. I now know why their logo, which you can see at the top of the screen, is a cloud. And I'll probably force that gag, but there you go. The views are absolutely stunning. They really, really are. So thank you to the Salesforce team for looking after me so well when I've arrived. Okay, so we're gathered some of the world's experts around our campfire today for a very hot topic and talking about embedded finance. So to start this exciting conversation, as banking service disappear into digital apps and the way we engage with financial services is changing, or many people say it already has changed. The beauty of embedded finance is that we can all access financial services at a moment in time when we need it. And the key word here is frictionlessly, okay? So that's without having to log into another app, without having to move to another website, make a bank transfer, fill in a loan application. So it should all be about the UX. And of course, open banking has a huge important part to play. Now, we're going to hear from Simon Torrenson in a moment, who forecasts that the market size is a colossal $7 trillion. Now that creates a huge opportunity, which I'm going to talk about in a moment. Now, if we look at this opportunity, it's driving the fintech innovation and creating a new order in the market dynamics, which I find absolutely fascinating. So it's changing the business models and their economic drivers. It's causing a seismic shift in the landscapes for banks, fintechs, and importantly, customers. Now, I've asked the panel to shine a light on all their use cases to illustrate this is real, it's happening, it's happening now, it's not just market rhetoric. Okay, so it's always got to be about the use case, the use case, the use case. So an underlying benefit of embedded finance is it offers a way to monetize a product without charging the customers more. Now, that has to be a good thing. So it enables clients to enter their products into the market far faster. So this works best if the embedded product is part of a cohesive and integrated offering. So again, that all points to an enhanced UX, and it has to be about that. It's the changes that embedded finance drives in our landscape that I said before that was fascinating. In a truly connected world, it's creating opportunities that are there for the entire ecosystem. And on our panel today, we have that diverse mix. Embedded finance sees some of the world's most powerful digital platforms taking aim at the SME banking. So we've asked our panel to be slightly controversial. So I'm going to quote from a recent Accenture report. And that states, for the incumbents, this makes for the arrival of a significant market threat and huge opportunity. So that market threat opportunity model again. So if the banks do nothing, new embedded finance offerings could claim, Accenture say, up to 32 billion of the SME revenue by 2025. However, if they jump in and get involved in the embedded finance market, they could expand that market by 92 billion. So let's hear from the banks. We've got Clearbank and NatWest, what they're doing. It's a fascinating dynamic. The opportunity is clear, but there's also a risk for those who don't embrace it. So let's talk about that as well. It's that wonderful threat opportunity risk model. Surely the digital platforms like MoneyHub that we've got on the panel and the banks that have secure that first move advantages with all the partners, they're going to be one that takes the market share and unlock those growth opportunities. So let's hear from them. So the question is, will we see more collaboration? I believe so. Maybe white labeling. Well, that's nothing new in financial services. We were doing that when I was running a card issuer decades ago. But if you want to know more about these fascinating dynamics in the market, may I suggest you do two things. You nip over to our blog, not now, at the end of this session, this campfire, and you read the paradox of co-opetition. I had to get my tongue around that, didn't I? So co-opetition is a new word in our lexicon of language. And it's written by Gio, a head of research, soon to be the first guy in the world to have a PhD in open banking. Sound a bit like his proud man, but we're all incredibly proud of him. And at the bottom of your screen, if you have a look down, you'll actually see that we've updated our ebook For those that are new to the industry, there's a very back to basics 101 of embedded finance. Now, you're going to be hearing a lot more from our research team in Q2, so a little bit of a cheeky teaser there. So before I pass the mic to our guest host, Scarlett, I just want you to give this some context and have a look at your phone. And you will already be using embedded finance in your health and wellbeing apps, in your investment apps, in your banking apps. So this is exciting change and is absolutely happening right now. So let's talk to the experts at the pointy end of making that change happen. So I'm absolutely thrilled to pass the mic over to Scarlett, who is the Chief Strategy Officer and Growth Officer, sorry. I'll say that again, Scarlett, it's important to get your title right. Scarlett is the Chief Strategy and Growth Officer at Money 2020. Our good friends at Money 2020. And she's also author of a book, soon to be published, on embedded finance. So you heard this here first. If the speaker's briefing call is anything to go by, you're in for an absolute treat. Now, what we have done is we've pre-recorded a session with Simon. So I'm going to pass over the mic to Scarlett and Simon for a pre-recorded session, and then Scarlett's going to pick it up. And I'm going to sit down because you've had a bit of a wobble, but I just wanted to show you that fantastic view of the gherkin because I really am up in the clouds. Over to you, Scarlett. Thank you.
Let's get started. Embedded finance, another buzzword that's going around the space. What does embedded finance mean to you? Why now? And really, what is the real opportunity?
Well, it's really about helping any company of any size in any sector incorporate financial services into their propositions and generate value from doing so. So financial technology has become so sophisticated nowadays that essentially all the things that were trapped within banks or lending companies or insurers or investment companies, all those capabilities and products are now essentially modularized, abstracted into software. And so it means that if you're a developer at a small bike shop that wants to add warranties or credit terms when people buy a bike, you can now do so really easily at a cost that was impossible in the past. And big companies like Uber have been doing this for some time. You get into your Uber car, you don't have to get your credit card out at the end of the journey because it's been embedded in their experience by their developers. And while third-party companies have been selling or incorporating financial services for a long time now, if you think about car dealers selling you credit or insurance at point of sale, or when you travel on an airline, they offer you insurance at the same time as you're buying an airline ticket, or retailers. Retailers have been trying to sell credit and loans and other things for many years now. What now is possible through technology is that anybody can do it, test propositions really quickly, and iterate them fast in a way that was just not possible before. So embedded finance is about enabling what I've just described. And why it's so attractive at the moment is because those types of companies I mentioned couldn't do it so easily in the past. Now they're able to, and there's a whole breed of companies that are making that possible, that essentially sit between those who provide the products and the brands and the merchants who want to embed them. And people call that B2B FinTech infrastructure. And that market is really taking off a lot. And there's a lot of VC money, a lot of entrepreneurs focused on that. And it's in principle due to be worth a lot of money over the next 5 or 10 years.
Yeah, if I remember correctly from one of the blogs, you had quoted that companies actively participating in embedded finance are predicted to reach a market cap of 7 trillion by 2030. So certainly we're not talking small potatoes here. There's vast opportunities. And I think one of the key things that you highlighted are not only the players in the space, but really the biggest beneficiaries of this movement, which are the end consumers who have these things naturally integrated into their day-to-day lives where they don't have to think about things that used to be quite cumbersome for them. So of course, it's quite a complex ecosystem. Can we talk a little bit about the role that traditional financial services play within this, and then separately firms outside of our world play? Like how do you compare those? What do they look like? What role do they play?
Yeah, so it's a big opportunity. It's also a threat to incumbent players in the industry, because the threat could be that they get commoditized, that these new intermediaries who are helping brands create these experiences for their customers, they choose who's going to provide the products, the capabilities. And so those who do that, which is essentially today the incumbent organizations, be they banks or insurers, they could get commoditized. And they could be suppliers into someone else's ecosystem. So at one level, banks and insurers and others need to think about, are we happy to play that role? And if we are, then we'll need to make our components, our capabilities really easy to be embedded by developers into their propositions. But of course, the other role they could play is to take that aggregator role and themselves provide the platforms that enable brands to do what we've discussed. And you start to see companies like Goldman Sachs and others starting to play in this space, Standard Chartered in Asia, and so on. So for the incumbent players, they have quite a conundrum at the moment, because there's the $7.2 trillion number that you talked about is, I mean, that's like double the size of the top 30 financial institutions today in value. So that's quite an attractive market to play in. But that is a software business. It's not a traditional business model that the incumbents are used to operating. So it's to me, it's a big strategic conundrum. Every incumbent needs to work out a strategy of where to play and how to win in this market.
So you mentioned some great names like Goldman and Standard Chartered. If we think about some of the players from, well, maybe are there any banks? Let's go for banks for a second. Are there any, or financial service providers? We could talk insurance as well, that you are surprised have not taken a more active position here? Like who should be playing in this space more aggressively that's not?
Oh, well, everybody. But I mean, really, is a small number of people who are being aggressive and assertive and bold. And, you know, you've got these programs, you know, the API program or the Open Innovation program at many of these companies, particularly banks. And they've been grinding along for years with a lot of theatre and a bit of flurry, but not actually making any big impact. And that was okay 5 years ago when they were trying to learn about digital technologies, but the market's moving so fast now. You've got companies like Klarna or Stripe that have really grabbed, you know, a lot of value. You know, why could the incumbents sort of created that? You know, they have all the assets to do so, but they're sort of trapped within their own organizational structures. Same in insurance as well. There's been a bit of dabbling in terms of some companies creating, again, APIs, but we're talking about something that goes beyond APIs. So talking essentially about operating systems. So operating systems that allow third-party brands to orchestrate and embed any type of financial service proposition to serve their end customers. And operating systems are very different than the business models that incumbents are used to managing.
Yeah, that makes a lot of sense. So if you think about the brands, you referenced Uber earlier, are there other brands that stick out that should be doing this at a more consistent level?
Yeah, so Starbucks is a great example. Starbucks, as you know, offers a wallet to its customers, so you can pre-order, you load up money into the wallet, and you can pre-order your coffee or your other things you want, and you get it much easier than you do otherwise. Now, actually, because so many people put money into that wallet, they have more assets than many banks do now. I think they've got like $2 billion, I think, that as a float. So they are now they are a financial service organization, and they've used technology to do that. And that keeps their customers happy. It gives them a lot of new opportunities to create more value for their customers. You've got this value in the wallet that they could then exploit for other things as well. So Starbucks is a good example. Walmart. I mean, Walmart has been in financial services for decades. I think something like, you know, don't quote me exactly. I think it's something like 11% of Walmart's profits comes from financial services today. Because financial services are very profitable if you take out all the overheads of operating a bank or an insurance company. And they're investing even more now. You saw their partnership with Ribbit, the VC. They've set up a new company now to do more fintech activity. And they're seeing this as really important for their future as well. Financial services are very sticky, of course, for end users. And then the big, incumbent giants, the tech giants like Google, like Facebook, Amazon is now starting to, has been in financial services for a long time, is now starting to sell insurance to SMEs, members of Amazon Business Prime. They'll be moving more and more into more types of financial services, investments next, I expect. And then the B2B software companies. So people who run software for many small businesses, companies like Intuit, which runs QuickBooks or Xero, they've been embedding financial services for some time now. And the reason they can do it really well is that they see all this real-time data about what their customers are doing, how well their businesses are going. So they're in an ideal position to offer solutions before their customers even think they need it. If you can see the company growing fast and taking on more employees, well, that might be a good idea to say you probably need some workers' compensation insurance, or you might want to take out a loan. And then, of course, and the company hasn't even thought that they need that at that stage. That's a golden position to be in that early, to spot those trigger points. And then Shopify is another great example where about 50%, which runs lots of SME businesses now, about 50% of its revenues comes from financial services and merchant services. And because again, they have all that data about the customers, they can do, offer revenue-based finance, which is very attractive for all parties. So yeah, increasing numbers of companies doing this. But one of the most interesting types of organizations are these really small ones, like I mentioned right at the beginning of our chat, the small retailer of e-bikes, for example, might have 3 stores around the town. And it would be impossible in the past for them to offer theft insurance at the point of sale. But now you can do it with in a couple of weeks because the infrastructure is in place to enable it. So we've just scratched the surface of what's possible. And I'm going to say where we need to look for inspiration is China and Asia, because they've been doing this. They're the pioneers of what I'm talking about. And they've been doing this at scale and enabling hundreds of millions of people to be financially included for the first time. And they do this through those digital platforms like Alipay and WeChat, which have continual daily interactions with customers. They are in a much better position to understand what customers might need, educate them on what's possible, and then make propositions to them, in much better ways than the traditional suppliers of banking or financial services or insurance could do. So I always say to people, look to what China's done and look at what you could replicate over here.
Yeah, that was such a detailed and complex answer. I mean, some of the key things that I took out of that, the scale piece, you talked about that, of course, with examples over in Asia, but more broadly, even the big tech players and the fact that they have scale, which enables them to utilize data in new and interesting ways. And I think data is a key component to this. Is we always talk about data within this industry, but there is the combination of using the data like you use with the Intuit QuickBooks example, where because you can see cash flow, you can say, hey, you need X, Y, or Z loan, or hey, you need this and that insurance for or workers' comp for your team. And then separately, how Starbucks, use data and actually benefits the customer. So the reason people are incentivized to preload money onto their Starbucks app because they get more points to do so. So they're not just doing it because they feel like it, but there is a direct reason as to why they would want to make that happen. But I love that how you ended with, it's not only all these big players, but we go as small as an e-bike shop with three stores. So I think we've got a lot of stuff here on why it makes sense, how it's so exciting. Let's spend the last few minutes, if you don't mind, flipping the coin and talking about what are the key challenges, because the future is bright. We've talked about the market cap. We've talked about all the examples, big to small. What are we missing? What are the bigger challenges that comes with embedded finance from here?
Yeah, depends who we are. We are, I don't know. But so if you think about let's start with brands who they are, traditional brands are all under pressure through digitization, like every type of business today, because their old business models were operated in a different world, and digitization tends to shrink traditional profit pools. So they are looking for new solutions to keep their customers loyal, create new revenues for themselves, create new experiences. And embedded finance creates that opportunity. But the challenge is that they don't know the art of the possible, because this is new for them. So I get even some of the most sophisticated retailers I go and speak to, and they said, do you know how you could use open banking data for cashback loyalty programs and then integrate it into a wallet and use that as a sticking point for adding more financial services? And it's like they've never heard this before. So there's a big education issue for big brands about what the art of the possible, because the capabilities are moving so fast. For incumbent players, the challenges there are their organizational structure. You cannot do that. You can't do software-based development, creating the type of operating systems that I mentioned from within the core business. There's just not the capability. And so the smart companies, some of the ones I mentioned before, have created separate units to really focus on this, hired in entrepreneurs, fintech entrepreneurs to run it, and hired very different people to drive it forward, and driven their business forward in parallel with the core. So I would say that's the other thing, the organizational structure, the skills that are not within our core business. Let's not try and wait for the super tanker to turn around. And then we've got, I would say, regulation is another issue, because as ever, regulation finds it difficult to keep up with innovation in a fast-moving market. And we need to make sure that regulation doesn't stop innovation for the benefit of end users, and because ultimately what we're talking about here is financial inclusion and financial wellness. If you think about how many unbanked people there are in the world, it's enormous. Many people have got a smartphone. That is the way of increasing financial inclusion, not just in emerging markets, but even in mature markets like where I live, or the 60 million people in the US who are underbanked or unbanked as well. So I would say those are there's a few others to this. Technology things can tend to be solved, but I'd say education and understanding, organizational structure and skills, and then making sure regulation doesn't throttle the potential.
I could not agree with you more, Simon. I'm smiling as I think about how I've approached the space, and it's very similar in terms of covering these key pieces. Well, with that, we are on time. We're so sad you cannot join us for our live open fireside chat next week, campfire chat next week, but your perspectives will definitely be incorporated, and I can use some of those things that you said with the fellow panelists to really build out and dive to a next level deeper for this. So thank you for your time, Simon. My hair is down. Those 10 seconds I was able to go get a blow dry. So we're back. And guess what? Another surprise is Simon is actually joining us live. We're going to get a double dose of that. Wow. Rewatching that conversation, Scarlett Sieber here, so much incredible insights, ideas, thinking about the data piece. As I was walking, I'm actually in office right now, whereas last time you saw my son in the background because I was at home. I'm in office, and on the way to work this morning, Simon talked about Starbucks. I got a nice little push notification as I was walking by a Starbucks. Come in today, get that espresso double point. So this is already happening real time, people. This is not some far off concept. Okay, Simon gave us a lot to start with. So I want to evolve to the next level of the conversation. As Helen mentioned when we started on the offset, we have the best minds in the ecosystem talking about embedded finance today. We have a head of fintech, Ryan. I don't know. I think after what Simon said, your title should maybe be head of embedded finance moving forward. So we'll see what happens there. Maybe we can talk to the Salesforce team about that. But basically, we've got a lot of examples of the benefits. I'd love to actually start with you, Sam, if you don't mind. Let's dive another level deeper. We talked a lot about the benefits for the business. I think we can still do some digging there, but I would really love to focus on what the benefit is for customers. So Sam, let's go over to you, please.
Well, for the customer, it's all about convenience, isn't it? I mean, I can't really explain how slick the open banking payments journey is when it's embedded. I mean, the control, the clarity, it's effortless. And consumers don't know it's open banking, and they don't need to know it's open banking, right?
And are there any examples on the business side that really excites you? You can either further elaborate on some of the ones that Simon talked about, because he took a lot of the good ones, let's be honest, but are there other ones that you want to elaborate on, or new ones he didn't mention that you think should get their moment in the spotlight?
Yeah, well, I think the big one for me is really about, we've got a lot of information about buy now, pay later, and we can see how incredibly fast that's taken off. But now I think it's the savings and investments time to shine. So we can do buy now, invest now. So buy now, save now. I think, we in the investment world have not found it that easy because of the need for direct debits, standing orders, all the kind of like legacy modes of payment that have been required in order to do savings and investments. Let's shift all that aside, because now we can make it as easy to invest as it is to get in debt. So I think that's probably the most exciting one. Just to give you a use case, to bring that to life. Everyone will relate to this. Opening an ISA, you've got to go and then set your direct debit or your standing order up. And apparently a lot of ISAs are opened up in the UK and they never, ever get any money in them. Because I think people just lose the will to live, right? You open the ISA up and then you've got to go and do X, Y, and Z. You never get round to it. You forget. The friction, stops you from moving on. You didn't open the ISA not to put any money in it, I'm sure. You didn't do that to wind up the business so that they've got thousands of ISAs with no money in it. So I really think that's probably one of the use cases is the wealth sector. And, just take our Nest government pension scheme in the UK and the work that we've been doing with them on the self-employed, and actually being able to spot when the self-employed have got some spare cash and sweeping that directly into their pension. And you'll all know about how reticent the self-employed are about actually saving into a pension, not because they don't see the benefit and not because they don't want to, but, they always worry about, what if I don't get any work next month or next year? I'm going to need my savings and I need to access them. So the last thing they want to do is put that money into a pension. But we've really got to try and get the self-employed doing that. The tax benefits are huge. The long-term savings benefits are massive. So we need to get them to do that. And recently we did a nudge, spotted when people had spare cash, served it up to them, asked them if they'd like to sweep a little bit of that into their pension. And we had people do it on the very first time. And that's a thumbprint with them, on the nudge straight into their pension. It's incredible.
It's a great example. And it's, you mentioned the buy now, pay later movement. It was funny, actually, on the Money 2020 channel last week, we did a poll and there was a whole debate on whether or not it's its own segment or not. But moving into wealth is actually a really interesting conversation, because one of the benefits on a consistent basis when I talk to different people in the industry, and as I was doing the research for the book around embedded finance, is the fact that there is this whole financial inclusion piece, which is, like you said, there is a bit of the educational piece, but a lot of it is just understanding the real impact. It's not that in the back of their heads, they don't know, hey, I should be doing this, but it feels scary. So it's like, let me show you what this actually means. We're talking, you take this piece, what is the impact in the long run? So that was a really great example. Thanks for sharing that, Sam. I'm going to go back up a level for a minute and I'm going to go macro. I'm going to have a few of you involved in this one. And of course, if there's something that someone really is dying to say, please chime in. But I want to keep the panel flowing because we got a lot of great minds here. And we're very blessed to have incumbents and a bunch of different perspectives in this conversation, tech companies, and you name it. So on the macro piece for a second, how is embedded finance facilitating this global shift to digital banking? I hate to bring in the C word, COVID, in this world, but you can't not. We have shifted to digital banking. So let's talk a little bit about the role that embedded finance plays in this shift. Ryan, I'm going to start over with you, Mr. Head of FinTech, and we'll move down. I'll go to Haley and then whoever else wants to join as well.
Thank you, Scarlett. I thought you just changed my job title. I thought you were going to introduce me as Head of Embedded Finance. But anyway, we'll stick with Head of FinTech for now. So look, the way I think about it is both in terms of supply and demand. I think the demand side of the equation is well understood. Simon touched on some of this earlier, but if you look at the world's 10 most valuable companies 15 years ago, these were industrial companies like Ford, like ExxonMobil, like GE. and their combined value was like $2 trillion market cap. If you look at that today, it's companies like Apple, Amazon, Tesla, and their combined value is 20 trillion. And they've got, there are companies like Netflix and Uber and Airbnb kind of nibbling at their heels. And a lot of that is down to the fact that these are platform companies, right? They are facilitating the exchange of value between a consumer and a producer. And they're creating world-class experiences for consumers. And so that's what people are used to. And I don't think that's fully come to financial services yet, but the demand is there, and the demand is there globally. And I think that is well understood. I think on the supply side of the equation, I think the infrastructure is catching up very, very quickly. So you have banking as a service provider like Solaris Bank, like Bankable, and API providers like Plaid, Tink, Yapily, and TrueLayer. And what they are doing are basically enabling any possible entrant into this market. I think there is competition from four corners. There'll be the traditional players that will be trying to transform as quickly as possible, and Helen talked about that in her intro. FinTech, BigTech, and also consumer brands like Walmart, like Tesla, that want in on this. And so what these banking as a service providers do is provide easy access to the global financial infrastructure. They operate out of all continents to really kind of streamline and make easy things like settlement, clearing, and KYC. And then at the same time, they're building software products and APIs on top of their platform, from e-wallets to credit as a service, insurance, investments as a service, digital assets, and so on and so forth. So I think I think the supply is increasingly global as well. And as we come out of the pandemic, we've seen a lot of VC funding entering this space, and will propel that growth even further.
Oh, have we seen VC funding? It's been there for a while, but it is doubling down. And it's interesting, even in a position where I sat way before I got into banking, I was actually a tech entrepreneur, and it's been really fascinating, especially over the last 12 to 18 months, a number of funds that I was talking to back then for a SaaS platform who are now dabbling into FinTech. So it's definitely a big thing. By the way, Ryan, I'm had to check my eyesight because you and Helen are like mirrors of each other with similar backgrounds, with lights and different colored seats. So very beautiful spot where you're at. All right, Haley, let's go over to you if you don't mind. Again, thinking about how is embedded finance impacting the shift to digital banking from your lens?
Yeah, absolutely. And so Ryan missed off a banking as a service provider in ClearBank. So I'll cover it, don't worry. I'm going to look at it from a slightly different lens in that ClearBank don't bank the end consumer directly. We are working as banking as a service and agency provider for those regulated entities that are looking to move into embedded finance and really moving into the payments market. So what we're doing is looking at that infrastructure. And so when I think of your question about how is embedded finance facilitating a global shift to digital banking, I kind of see it as a bit of a reverse, in that embedded finance has grown at pace from my side of the fence because of those customers and partners that we work with at ClearBank needing to shift to a more digital, a newer tech infrastructure. So if I look at my customers in a bit more depth, they're replacing legacy tech. You've got banks, FinTechs alike that are still actually in a position where they need to move to a more API first landscape. So therefore, embedded finance or embedded banking is a really useful and cost effective tool for them to ensure that their infrastructure is in line with the current and future tech landscape. You've also then got the newer players that we're helping to move into the market. So more of the banking as a service customers, FinTechs and challengers in the banking space that have the benefit of new clean tech, but want to focus on their USP. So partnering with the likes of us and the others that Ryan mentioned earlier really allows them to focus on their USP and what they're bringing to the market for that end consumer. So I kind of see embedded finance and digital banking as something that's hand in hand or enabling each other, I suppose, rather than one enabling the other. That's my personal take on it anyway.
Mutually synergistic relationship, it sounds like. Okay, anyone else want to chime in here on this topic before we move into the next one? Feel free. If not, I'm going to keep going. I'll pause for a second. If not, I'm going to keep riding on the train.
Well, Scott, I think I just wouldn't mind just bringing it to life a little bit before we move on, because we talk about some of these good examples, and I know that Simon, you mentioned in your pre-recorded video so much, but I thought it might be nice for the audience to see it a little bit live, and the reason I say that is because who would have thought that open banking would be in a physical product in the market? And I think that's what I'd just like to show the Samsung video, because this is about an actual kiosk, a physical piece of kit with open banking embedded, enabling people to pay in a kiosk, like you buy your tickets at Great Western or, at Burger King on the big screens. I mean, this is Samsung taking this to the next level. So I don't know if we can just play the video. Oh yeah, it's playing. Sorry, I didn't clock that. But you can see here that, this is the Samsung kiosk, which is actually someone buying a coffee on this case. And it just integrates straight with your phone, literally with whatever bank account you've got. There is no card, no rail payments, so reduced commission, straight bank-to-bank transfer for the retailer. Let's not underestimate how powerful that is. I mean, we talked about Starbucks before and the kind of balance sheet they've got, but after 3 o'clock on a Friday till 9 o'clock Monday morning, card payments don't really get into the retailer's bank account. They go through the system, and open banking, 15 seconds, bank-to-bank payments on average 2.4 seconds. So if you're Burger King or your Starbucks, from 3:15 on a Friday till 9 o'clock Monday morning, where do you want that money going? I kind of want it in my bank account rather than sitting in a world offshore world of finance that this money disappears into. So there's some big things happening. And if you'd said to me 2 years ago, we're going to have open bank, Money Hub open banking API for PIS in a physical piece of kit like that, I'd have said you're bonkers. And I'm quite forward thinking.
And that's a really interesting example, right? If you went back 20 years ago and talked about having what this now is an iPhone, people would say you're crazy. So we have definitely done some fundamental shifts here. I want to go back a little bit. I think too, Haley, you brought up some really interesting data points around the cost effectiveness and other pieces there. As someone who was working on forward-facing technology at banks, at the likes of BBVA and others, I think there's so many great concepts that we've discussed, but let's look at some of the challenges in a little bit more detail. It's quite hard to do these things in practice, or at least it feels quite hard from the incumbent's perspective. So what are the key challenges? Let's just dive a little bit into this. What are some of the key challenges when it comes to implementation, and how do you overcome these barriers? Haley, since you talked about all the benefits, maybe we go back to you with some of the challenges first.
Yeah, sure. So I think the main one that sticks out in my mind when I consider my customers, but also how that impacts the ultimate end user, is the complexities around the regulatory landscape, really. So it should have an environment where we're able to sort of play and operate, send payments securely, but also maintain that integrity of the payments infrastructure. So I think the responsibility of who complies and where that sits can be a little bit difficult to digest in some cases. And that can lead to complexity when trying to work through it. But there are tools being brought in. So there's an FCA Reg Sandbox, for example. But I do think we're going to see a little bit more around the regulatory landscape for those that are looking to enable end users in the market, as you see embedded finance continuing to grow and pick up pace in the market, because it's an area and a hot topic in industry around everything that it enables, but also the responsibilities of the data that sits behind it, and who's responsible for ensuring that payment gets to where it needs to, and all of the stuff that comes with it, that I think we're going to see a lot more focus on, and it may get a bit more complex before it eases up. But that's one that I definitely see as a challenge when we're talking to our customer base.
I know we have some incumbents here. I know, Ryan, you had mentioned you have some thoughts on this, so please feel free to chime in if anyone else wants to talk about it, because it's definitely something that it's really excited to get connected to and surrounded by the movement of the future, but we got to talk about how best to do that. So thanks for your thoughts on that, Haley. Ryan, anything you wanted to add?
Yes, I just very briefly, I think what you'll start to see is banking as a service propositions from the incumbents, whether they, so that they can enable brands directly. I've seen and heard things from Standard Chartered, particularly Barclays and banks kind of all across the world. So I think they're catching up to this and trying to figure out, well, look, how do we approach the market? What will we be famous for? Which niche, which category or niche do we begin with? But I think we'll see more of that in 2022 and beyond.
And just to add to that, both earlier points, I think regulation as well needs to be simplified, because at the moment in this space, you've got overlapping regulators, and having alignment and having a clear direction would really help the market. I also think on the kind of evolution of this and having consistency of standards and what's the vehicle for evolving the standards, involving data sharing, and ensuring that there is kind of a common experience and common performance across the ecosystem as well is important.
Yeah, that's a really good point. Thank you for that, Stephen. Let's, not everyone is going to be able to see this, but I will hopefully, although there's a little bit of lag on my video, so maybe not. If not, Helen, you can chime in, but I would love to hear from all the panelists, whether you put your hand up or write it on a number before, because we want to move to the future, right? There's a lot to look at where we go from here. But before we do that, let's do a level set. Where do each of you, all 5 of you, think that we're at, from a level of 1 being just getting started to 5 being we are there, things are great? Where are we at in that journey from embedded finance? 1 being just getting started, 5 being we're there. Please let us know 1 through 5. But at the end, I'll share the results because I can't see you right now. So we will get back to that, but I definitely want to see how the collective feels across the ecosystem. So now let's move over to the future. We can just start short-term future, next 12 months. What do we expect in the next 12 months for embedded payments? Specifically, we look at things like VRP, most of you know, but variable recurring payments and sweeping. What does that look like? Whoever wants to start, please go ahead.
Stephen went to start, but he's on mute, so I'm going to sneak in.
Yeah, I know what happened. I muted myself and then I got muted.
You go ahead, Stephen.
Go on. No, you go on, Haley.
I think from a personal perspective, as a consumer, what I would like to see more of coming into the market is, obviously, there's a lot in terms of the online journey that enables open banking and payments in that respect. But what you don't see is the point of sale stuff really picking up pace. It's still very card driven. I would love to be able to pick up my phone, scan my face, and rather than use my card to initiate the payment, use my bank account to initiate it, or to get the refund back in at a point of sale if you're returning something, goods or whatever it may be. I think that kind of thing will really help to drive that end user awareness of open banking and payments in terms of embedded finance and what is available. And through that, you'll see the adoption. I think we went past 5 million in terms of open banking over the last week or so, but I think it will just really help that adoption and therefore that end user awareness to start to pick up pace.
I agree with you, Haley, but I think the best thing for me about VRP is the protection for vulnerable customers in some of the applications of it. So, for example, if you think about the way direct debits and standing orders, or direct debits, particularly with variable direct debits, have been abused by companies to the point where people have had money taken out for, electricity bills or water rates. I mean, council tax, you name it. They've had bills taken out where, what's the variability element has put them into stress. And, with variable recurring payments, that to me is the big difference. What you're putting back you're putting the consumer back at the control front. So I can say, for example, well, my electricity bill is normally £50 a month, and actually I don't mind it going to £70 in terms of variability, but it's not going over 70. So no longer can you suddenly take 120 and muck up my entire world of finances. That is not possible. And I don't know how many people realize that direct debits, the reason you have a direct debit guarantee is because actually when you sign up to a direct debit, you actually do enable them to empty bank account. You can't stop them. I mean, they have access to your bank account. I mean, I know, it's theft if they take more than what's owed. It doesn't stop them emptying it. And we've seen that. So I'm such a fan of variable recurring payments for the consumer.
Yeah, I think there are some really interesting use cases around VRP and sweeping. I read somewhere that there is £100 billion of money sat in business current accounts that isn't generating interest. So through sweeping, that could be reallocated dynamically month to month. I think there are use cases around overdrafts, so kind of the reverse, right, where you're in debt or where there's a bill to pay on a credit card, perhaps. That could be again addressed much easier, and also use cases around tax as well, siphoning off money on a purchase to cover a tax bill later in time. So yeah, I think the scene is set for a lot of innovation, perhaps in the second half of this year.
Yeah, we're seeing from a lot of the people who we're talking to a range of use cases for VRP. But back to Hayley's point, I think there are some areas such as point of sale, more in the e-commerce space, that are kind of missing and could be there as well. Most of the use cases we're seeing are kind of a standing order direct debit replacement.
Thank you for that. So now I have all of your results. So first of all, very rare given the few minutes that we had beforehand that we were definitely not on the same page beforehand, which is great. But all of you minus Simon, which he's the pot cockler, so I'm not so surprised by that. All of you said in terms of scale of 1 to 5 that we're at a 2 in terms of how far advanced we are from embedded finance. Of course, Mr. Torrance gave us a 0.5. So with that, you started giving some great examples, Stephen. I really appreciate that. So if let's elaborate on that a little bit. What other opportunities are yet to be leveraged that are really exciting examples and use cases for embedded finance? Anyone who wants to take a stab at this, go ahead.
I'll take a stab. So going into things such as e-commerce and being able to kind of have digital wallets, going into more rentals and looking at how you start to replace the rental market and some of the rental propositions, whether anything from appliances to properties, using this as well. I think billing, we've already talked about replacing DD direct debits. These are huge opportunities. And you look at the value of the market in those payments already. And given we just discussed from Samantha, etc., how good the experience is, that's a huge opportunity.
Yeah, I would also sort of loop back to Samantha's video of being able to enable a Burger King or something like that to use technology to really circumnavigate the card infrastructure to gain payments. Those kind of examples really stand out to me. And just thinking of what we were talking about earlier and Simon's chat at the beginning with you, Scarlett, around Starbucks and others, it's already happening. It's just, unless you're directly involved in that payments landscape, you may not be as aware, I think, in that. When I went into town yesterday, even M&S are pinging me saying, oh, do you need to go and get your food shopping? If you do, here you go. They haven't quite got to the point where I think they've embedded a payments journey, but they're starting to use data, and that's one key part of it. So I think we're just going to see more of that use case as people get past COVID and go out into the wider world. Seeing it integrating into your new daily life and routine, I think, is going to be quite a seismic shift. If you look back 2 years ago when COVID started, none of that was happening on my phone when I went into the office, that's for sure. But now, the lot of them, they're all pinging me, letting me know that my coffee's ready if I want to go and get it and all that kind of stuff. It's just really going to change the dynamic in the next 12 to 18 months, I hope.
But it's also back to Simon's point about education as well, and especially with the brands, because they're in a very cards mindset. The cards industry has spent the last 40, 50 years telling them about cards. We've trained consumers to use cards, to save cards and on the Uber app, etc., and Starbucks app. There does need to be a kind of education step change here about account-to-account payments?
I think another a big opportunity for embedded finance is with small, medium businesses. There are 6 million of those in the UK. And I read somewhere that they were impaired to the tune of 126 billion during the pandemic, and that 30% of them still didn't get access to the working capital and then the growth capital that they needed. So times have been hard. Simon talked earlier about the innovation in the East kind of leading the way, and I think there's a really good example with My Bank, which is owned by Ant Group, who've embedded their lending journey into Alibaba for their merchants. But they've lent over $500 billion and have a default rate of less than 1%. And what's really, really clever is that they collect a lot of data from how those merchants are trading online. They look at the store performance, they look at the sales history, they look at the sales projections. They collect over 3,000 variables before making a decision and underwriting a loan. But they've also made the experience very easy as well. So they pride themselves on what they call the 310 model, but it's 3 minutes to complete the application, 1 second to get a decision, and with zero human involvement typically. So I think, it would be great to start seeing more of that in the Western economy. I thought that the step last year, or the collaboration between Amazon and Goldman Sachs, was really interesting, that Amazon will now lend up to $1 million to each of their merchants online as well, embedding that as part of the Amazon experience. So I think there's a huge market, and I also kind of wonder how much of that 7.2 trillion is kind of consumer versus business opportunity here. But that would be my take on things.
Got it. Well, I got to say, Ryan, we're sitting here and we're talking about data, and I couldn't count exactly, but you used at least 11 or 12 different data points. I was going to try to bring them back, but you kept going. So I can't synthesize them now. You did too many of them. So go back and listen to this part of Ryan's talk, because there was a lot of good numbers that you can use when you're having conversations with colleagues, friends, or whomever else. Lots. There was 1 or 2 that I hadn't heard before there. So thanks for that. Data is key, as we've been saying. So of course, this has been a very interesting conversation, but we have to bring it back to the end consumer at the end of the day. How is everything that you all have collectively just described for the last 20 minutes or so? What are the drivers for the consumers? Like, how are they going to naturally be adopting to this? I know we talked a little bit about Uber. They didn't really have to do much, because now all you did was remove payments from the experience, where they didn't have to take out their wallet. They didn't have to think about the money. What are the other key drivers for consumers to adopt for these new use cases? Love to get, Simon, want your perspective here. Haven't heard, and we got a lot from you earlier, but maybe a little something here that you can add in, and the rest of you as well.
Yeah, no, I'll give you a good one. Here's a big number. The retirement savings gap. That means the gap between how much money people are likely to have and need to live comfortably when they retire, in the UK alone is $8 trillion. And that is growing at a rate of 4% per annum. So that's about double GDP growth. Worldwide, I've got the figure, it's $70 trillion. So my children, on average, will live to the age of 100, but they cannot afford to do that because the state can't look after them, and they're not saving enough. So if you think about a real consumer problem, or a problem for the whole of the financial services sector, that's a very big one. You've got a $70 trillion gap between what people need to retire and what they've got available today. So, there's a real societal opportunity to do something different, and embedded will help to close that gap, because it's much better at closing the gap between what people need, savings, and what they're being offered, things that are, well, they're not saving.
And I can back that up, Simon, with because the power of putting your current money alongside your future money, you can't underestimate the impact that has. So, in the past, we've not been able to put our day-to-day money here and now alongside ISAs, investments, pensions, property. We've not been able to bring all that together, and we can now, and it's incredible. We've seen some of the pension providers increase engagement from less than 5% to more than 60% with their pension. And that's by actually putting current money alongside future money, which is incredible, right?
I would say the consumer, right? I believe Simon's number of 7.2 trillion. I think there's a phenomenal opportunity for companies that want to execute on the embedded finance vision, but I think it's a really big pie that will be split up across lots and lots of different players. So I think for me, it's the consumer that is going to be the biggest winner here. We've talked a lot about financial inclusion here. The inequality gap globally is huge and ever rising. And if you look at the stats in the UK, 1 in 4 households are financially excluded, which means that they are living, they have only enough savings to kind of live from month to month. And if they were to lose their job, then they'd be out of work. 1 in 7 adults is expected to have a job in the gig economy this year to help plug the gap. So I think some of the use cases that we began to talk about around embedding investments and some of the sweeping use cases to do roundups and savings plans and things like that are going to really start to help narrow the gap.
Scarlett, I
go
think
over to you, Stephen.
Yeah, go for it.
I am. Let's go over to you, Stephen.
Sorry, was that me? I didn't hear you.
That's you. That's you. Back up to you.
So consumers will overall be the biggest beneficiaries of this by far. I also think brands. So if you big brand and you've got trust of those consumers and you've got fantastic, slick digital journeys, you're going to benefit in this space. And lastly, I think financial providers who are really becoming very data-driven, very API-driven, very engaged on a competitive landscape of digital journeys are going to be winners, but they might be fewer, I think.
I like it. I like it. That's a bold prediction and one that I actually agree with. So it's financial services is a big part of it, but it's not everyone. There's the few and the far between. All right, Haley, my dear, over to you.
Yeah, I have to say, when you initially asked the question, which I love, by the way, I thought this is just the move with tech and regulation and everything really bringing it to the forefront for consumers to benefit. And yes, others will benefit, but consumers are waking up as much as those new players in the market, so they really stand to benefit the most. But Stephen's point about those big brands, what if Starbucks wants to become a fully fledged bank? What if Amazon does the same and offers a current account? How does that change the game of finance in general, but also empowering that consumer, because you're embedding so much in their journey in one place on your app, on your phone. It's a very interesting use case.
Sam, over to you.
It's definitely the consumer every time, but only via what I would call the more non-traditional players and legacy players in providing products and services in a way that they haven't been able to date. So that's how the consumer is going to really benefit, because the products and services that we've seen traditionally are probably gone. They're done. It's new products and services. I mean, even just take insurance. You're going to be able to insure me, not the product. So you're going to insure. They're going to be insuring me, what car I drive, the house I live in, the storm we're in at the moment. It doesn't. It's not. The products and services are going to evolve to be very consumer centric. So I'm going to benefit, but I'm only going to benefit because the legacy providers move to the new products and services, which will happen. Not all of them will make it, I guess.
Thanks for that, Sam. All right, Simon, we got to close out with you. We started the conversation with you. We're going to end with you. What's your 60-second take? Yeah,
so on the supply side, I would say it is those who sell the picks and shovels like ever who tend to win in growing technology markets. And specifically, it's the operating systems that connect demand with supply. Now, who that's going to be, I don't know, but whoever takes that position is going to be the biggest winner after the consumer, I would say.
All right. With that, Helen, it's back over to you. Thank you all for your contributions. Got a lot of agreements and some disagreements, which is always a healthy way to have these type of discussions. So Helen, back over to you.
Scarlett, thank you. Excellently hosted. Thank you very, very much. I cannot wait to read your book when it comes out, and we will do everything that we can to make everybody aware when it's published. I'd like the first signed copy, by the way. So how do I follow that? Well, may I suggest that when we post this online, that you share it? I think that probably is the best compliment I can give everybody. As Scarlett mentioned, the figures that Ryan shared, absolutely. And I'm sat opposite him, and those are off the cuff. He hasn't got them written down. So, kudos to you. You've got an incredible memory, well briefed. But listen to what Stephen had to say about VRP and how the incumbents are tackling this market. That is a hugely interesting space, as Hayley made out. Sam's video, absolutely phenomenal. Thank you, Sam. You nailed it. Simon, you lead the discussion around embedded finance. I am so grateful you could join us on the day, which is a beautiful segue for me to thank my team, the OBE team that work incredibly hard behind the scenes. And a big shout out to Nikki. Nikki, who handles our campfire logistics. You have no idea the amount of juggling that she has to do to make this work and be so seamless behind the scenes. So, Nikki, thank you very, very much, sweetheart. So all I would say is please share this when we post it online. A huge thank you to all of our expert speakers and a big shout out to Scarlett and our friends at Money 2020. All that remains is me to say another thank you to Salesforce. And I have to say, they really are in the clouds. For anybody in the UK, and I know we have a global audience, but for anybody in the UK, there's a big storm about to hit London. We are 40 stories high, and it is absolutely dramatic. We are literally in the clouds right now. So thank you, Salesforce, for looking after me. Wish you all the very, very best of health. And until next time, thank you for tuning in. Take care now. Good. Bye-bye.